We're definitely cautiously optimistic. I mean, it's an ugly day today, an ugly day on Tuesday, but we think the selling is a little overblown. You look at the market, they've sold off significantly, but you look at valuations. The forward PE in the S&P is around 15. The PE ratio is down about 15% over the last year. This is because the S&P has been pretty flat. You've seen earnings growth up about 25% year over year, so good news there. Yes, there's a laundry list of bad news out there. Tariffs, the news last night about the CFO from the company. You have Fed, you have concerns about earnings growth, but think about profits. Profits, yes, profit growth is decelerating, but profits overall are still growing. And you look at some of the short-term effects. You look at home builders. Home builders were really hit hard. They're starting to bounce back a little bit. Semiconductor equipment manufacturers are starting to bounce back. And also, you look at the yield spread. Everyone talked about an inverted yield curve, and the 2 and 10. It's actually widening somewhat. It's actually good news. So we're not, we think the selling was a little overblown, just like the buying on Monday was a little overblown, but we really remain cautiously optimistic for the balance of the year and early part of next year.
Santoli, oil, we can say, supply, technical factors. The yield curve, there's some weird things going on, supply, we're doing this. None of it really means anything. Is it possible that it's all, the stock market needed a 10% correction, this was all normal? You could explain it all away, but is that? I mean, are you just whistling past the graveyard?
I don't know about whistling past the graveyard, but I think the problem is you'd have to go down a pretty long list of things to explain
That's
away
what I
at
mean.
this point. So it's not, and I think that's
including an arrest in Vancouver, which suddenly is like rattling the world.
Which is interesting because I mean, when the market has already been under stress like this, there is often some kind of one-off headline. Last night, it looked like the futures were going to have this sort of mild move, and then we got this news. Now you have to ask yourself, is that
a rebound? I thought it was going to be a rebound.
Yeah, exactly.
We all were feeling pretty good. Got everybody sitting in the front row,
One day cooling off period.
Here's my question. Is the reaction to this news telling us why it's important? In other words, maybe, and I've been a little bit skeptical of this all along. Look, the trade stuff, yes, the trade hurts globally. But maybe what the market's really telling us is, look, we're much more concerned about a tech Cold War type of thing between the U.S. and China. And if that's the case, this is a major salvo on that front.
I think it reflects both that possibility and how much stress the market has been under, right? So the market is just reaching for new excuses to go down, right? So if FANG was still going up every day over the last 3 months, a lot of it would seem less severe. If oil didn't go into free fall on October 3rd, things would seem less significant right now. So I do think it's too much at once. I would broaden out the chart a little bit, though. It looks a lot like 2015, 2016 in terms of, separated by months, you had these two nasty corrections of different types. In 2015, you remember the Fed got that December rate hike in, and then it was it for a year. So who knows what it really means? Yes, we had Brexit headlines the other day. You had senators saying, taking the other side on the Saudi, investigation. I mean, a lot of stuff was thrown at this market in the last week or so.
Gene, if we don't know which part of the yield curve to trust now, but if I've heard how attractive cash is all of a sudden. Well, it's getting less. I mean, on the short end, it might be getting more attractive, but the yield curve is not. I'm not ready to sell. Not that I have any, but if I own stocks, I wouldn't be ready to sell everything for 2%. I don't care how long I have to go. Would you? I mean, it doesn't seem like it's that great to. Cash doesn't seem that attractive to me. More attractive, but. I don't know. Maybe I'm with you. Did you say cautiously optimistic or optimistically cautious?
Cautiously optimistic.
Okay. Is that like bearishly bullish? That's Ed Keon's thing. Or barely, B-E-A-R-L-Y, bullish is his thing.
And Joe, you had a great point about the two-year. Like the 2 year is at 277 right now, which is a good proxy for where the Fed will be about a year from now. So if you think about 277, you're looking at maybe 1 or 2 rate hikes next year. That's good news. Remember, about a few months ago, we were thinking maybe 3 or 4 hikes. Yeah. 1 to 2 is pretty good.